In this video, let's look at what Wall Street is projecting for 2025 for the US market. Analysts are projecting S&P 500 earnings to grow by an impressive 14.8%, okay, pretty much 15%, way above the 10-year average of 8%, almost double that. And this chart shows you the S&P 500 earnings and revenue growth from 2014 to 2025. These dash bars are projection because they have not materialized yet. And in this chart, the blue line represents the earnings, the green represents sales for calendar year 2025. Again, they're projecting the earnings to grow 14.8%. And the growth is going to diversify away from just the large cap technology stocks, also known as the Magnificent Seven, representing the 7 largest market cap technology stocks. The Magnificent Seven stocks, the growth, earnings growth dropped from 33.3% from calendar year 2024 down to 21.3% in calendar year 2025. And the other 493 companies in the S&P 500 index are projected to have their earnings growth increased from 4.2% in calendar year 2024 up to 13% in calendar year 2025. And again, that's a broadening of the earnings in the for the members of the S&P 500 index. So pretty much the rest of the index that are not Magnificent Seven, they're going to see the earnings growth pretty much more than triple in terms of earnings growth in 2025, and that's a clear sign of a broader strength across the market. Now let's look at the sector performance. All 11 sectors in the S&P 500 are expected to see growth in earnings, but here are the real winners. Number one, we have Infotech, or aka the tech stocks. They're expected to grow 23.2% in calendar year 2025, and followed by healthcare is projected to grow 20.6% in earnings. Industrial, number 3, project to have 18.8% growth in earnings. The worst sectors are energy at 3.6%, real estate at 4.6%, consumer staples at only 5.5%. Now let's take a look at the revenue growth projection for calendar year 2025. The overall S&P 500 is projected to grow 5.8% in revenue compared to 2024 calendar year, with technology being number 1, projected to grow 12.6% in revenue, followed by communication services at 7.7% and real estate at 6.7%. And the worst one is actually energy, and the only sector that's down in revenue, projected to have a minus 0.6% in revenue. Industrial up 1.8%, and consumer staples projected to be up by 3.4% in its revenue. Let's look at the profit margin, okay, and the estimated net profit margin for S&P 500 is actually 13%. Okay, it's this bar here for calendar year 2025 at 13%. It's a lot higher than the 10-year average of 10.8%. If this 13% holds true, it will actually be the highest profit margin ever recorded since FactSet started tracking this in 2008. Okay, this will be the highest on record if this does play out to be 13%. Okay, so for context, currently, as we can see here, the record high is at 12.6%. That was set in year 2021. Now, of course, a lot of these projections are based on the monetary policy projection from Federal Reserve that's implemented by Federal Reserve. A dovish monetary policy will stimulate growth of the economy. A hawkish monetary policy will suppress growth of the economy. In the December FOMC meeting, the dot plot indicates that there will be 2 rate cuts. Each one is 0.25. 2 rate cuts by end of 2025, but the market is expecting 1 rate cut only. So that actually caused a hawkish shock. Okay, but historically speaking, the market expectation is derived from the Fed funds futures. Okay, so historically speaking, the Fed funds futures are not super how do you say it, how super accurate. As you can see here, we have a Fed funds rate versus a Fed funds futures at different point of times. As you can see, throughout the history, these dots are not super accurate because these futures projection always change as new data, new economic data, and news event they come in. Okay, so they fluctuate based on incoming data. So that's all I want to share with you today. So what does this mean for you? It seems like 2025 is shaping up to be a year of opportunities with a broader growth and a expectation of high market strength. Thank you very much. Please don't forget to like and subscribe.